the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements on the SGX. Singapore shares dipped today, tracking movements in the region. So if we look at the STI, it was down 0.31% at 3,885 points at about 2:13 p.m. Singapore time. And that is with a value turnover of some 681 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI was down 0.56% at the close at 3,876 points. In terms of value turnover, we're looking at 1.15 billion Sing dollars. Now gainers trailed losers 212 versus 298. Top advances for today, we've got for you GMH USD, SIA and Global Testing. And top decliners, we have DBS, Jardine Cycle and Carriage and UOB. Now, in terms of companies to watch, we've got for you Creative Technology because the company named Freddy Sim, the younger brother of its late founder Sim Wong Hoo, as CEO. Now, elsewhere from shares of Alibaba slumping on the back of a report that its AI deal with Apple was facing scrutiny in the US, to how Nvidia plans to sell a technology to speed up chip-to-chip communication needed to build and deploy AI tools. We've got more corporate and international headlines in focus. And joining me on a Monday is David Kuo, co-founder of The Smart Investor. Mr. Kuo, welcome back.
Oh, thank you. Welcome back to you also, Tim.
Thank you.
You've been on your travels again. We have a lot to cover today.
Yes, we have a lot to cover today, but let's start with the Singapore stock market as usual. A quick one here. How did the STI fare today? Any surprises?
Well, not very well, and virtually no surprises whatsoever. We only have to have a look at those U.S. 10-year treasuries. They are yielding at the moment above 4.5%, which therefore means that as far as some investors are concerned, that risk-free rate of 4.5%, why would you want to go out and buy stocks when you can get the risk-free rate at 4.5%? And so I guess that is what is causing the downward pull on not only the Singapore market, but the rest of Asia, Malaysia, Hong Kong, and also at the moment in the UK. The FTSE is down, and I think America will also be down. So no surprises also that many of the real estate investment trusts are at the bottom of the league table today. So the likes of Fraser Logistics, Capitaland Ascendas, Mapletree Logistics, Mapletree Passenger, Mapletree Industrial, may I go on? Those are all down at the bottom of the list because people are saying, I might as well buy those 10-year treasuries instead of waiting for the distribution.
Okay. Now, Mr. Kuo, let's have a look at Cinemas Land, one of the companies to watch for today, because Leon Investments said yesterday that its offer price of 37.5 Singapore cents per share of the property developer is final. It does not intend to revise the current offer price. How would you read into the latest comments?
Well, when I look at Cinemas Land, I just sort of see that the offer is on the slightly lower side. I mean, the price to book is at the moment 0.5, and so I would say that if I was an investor, I would like them to up the offer. But they've already said that they're not prepared to up the offer at all. They said it's gone through some independent valuer, and the independent valuer says it is fair, and so therefore, in reality, I think the existing shareholders don't really have much say in the matter. And that is one of the dangers sometimes of investing in companies. You think that something at a price-to-book value of 0.5 looks cheap. I can go in and buy, and there is probably another 100% upside on that, only to find that somebody comes in with a lowball offer, and the person that does come in is one of the major shareholders. And so what do? I guess you just have to accept it, unfortunately. I mean, that is part and parcel of investing sometimes.
Now, from Cinemas Land, Mr. Kuo, let's go to Creative Technologies. Quite an interesting piece over here because the company has named Freddy Sim, the younger brother of its late founder Sim Wong Hoo, as CEO. Now, what is interesting here in particular is how the new CEO will be paid a nominal monthly salary of, get this, $1 a month, just like his brother, who passed on in 2023. Any thoughts on that, and how did investors react to the succession news? Not too positive, I suppose.
Well, Ken, would you work for $1 Singapore?
It depends, because that's the company his brother founded, isn't it?
Well, exactly. So therefore, I think what he is hoping for is that as far as I'm concerned, he probably does own shares in the company. So therefore, taking a nominal salary of $1 Singapore dollar a month is kind of irrelevant. I mean, we've seen that in many companies over in the U.S. where the founder or one of the controlling shareholders or the CEO only wants a nominal salary, and they say that what I'm actually working for is the benefit of shareholders, and what I'm hoping for is that my talent will be able to drive that share price higher. So in some cases, when you have a look at the salary compared to what they actually own in terms of the equities in the company, it is not really that relevant. And so I can fully understand that. I mean, you've only just come back from America, and as you well know, I mean, Warren Buffett could actually pay himself a huge amount in salary, but he doesn't. I mean, he just takes what he would consider to be an adequate salary, and the rest of his money actually comes from his investment in the company. So let's hope that the new CEO coming into creative technology can drive that share price higher, in which case the salary is almost irrelevant as far as he is concerned. Yeah, so I think more CEOs should work like that. I think it would be great if they say that I'm not here for the salary, I'm here for the shareholders, and because I have a skin in the game, I have a stake in the company. When the company does well, I will do well. Isn't that a great way to run a business?
But a quick one, Mr. Kuo. Investors weren't too happy about the succession news, isn't it? If you look at share price down 2.77% today?
Yeah, well, maybe, he has to prove himself. From what I understand, he is an entrepreneur and he is quite creative, no pun intended. And so therefore, hopefully, he will be able to put his entrepreneurial and creative talents into the business and produce something, in which case the share price will then follow. But if he does nothing, then I think people will be a little disappointed. But have faith in the man. If he's prepared to work for virtually nothing, he must have something up his sleeve.
Okay. Now, Mr. Kuo, let's set our sights across to the region. Asian shares fell today as a mixed bag of Chinese economic data showed the domestic economy was struggling, even as U.S. tariffs began to bite into exports. Do you think that will eventually push Chinese and U.S. officials back to the negotiating table? And what's the outlook then for Asian equities?
Oh, for sure. I think China is hoping that consumer spending will be able to drive economic growth in the Middle Kingdom. And what we have actually seen today is that, yes, there is some growth in retail spending, but not sufficient. And so therefore it has to put more effort into that. Industrial production was okay, but I'm just wondering, what are they producing and who are they producing it for? Because it's certainly not going to America, or unless they can actually sort things out, definitely it won't be going to America. And so China has a lot to do, and China has a lot to prove to the world that it is able to shift its emphasis from manufacturing and industrial production into consumer spending. And until it can do so, then I think not only China needs to be worried, I think the rest of the world needs to be worried, because you've got over 1 billion people there. And I think people are saying, if my goods cannot go to America, it has to go somewhere else. And they're kind of hoping that maybe, China will be able to take up the slack and be able to import some of those goods and then drive their economic growth. But at the moment, nothing seems to be happening. And I think, going back to your point, do they need to get back to the discussion table again? And I think the answer is definitely yes. I mean, these two countries are symbiotically linked. They both need each other. And so the sooner they realize that they both need each other, the better I think it will be for the two of them and also for the rest of the world. I mean, at the moment, they're just behaving like children, the two of them, refusing to talk to each other. It's just embarrassing, I think, both for the American president and also for the Chinese president. Just grow up, will you?
If you're just tuning in, we're in conversation with David Kuo, co-founder of the Smart Investor. Well, Mr. Kuo, in corporate news, if we look at shares of Alibaba Group Holdings, it slumped close to 5% at one point in Hong Kong today because the report noted that the Trump administration has raised concerns over Apple's potential deal with the Chinese tech giant. Now, if we go by a report by the New York Times, the White House and congressional officials have in recent months been scrutinizing Apple's plan to strike a deal with Alibaba to make Alibaba's AI available on iPhones in China. Your thoughts on the matter? For how long will the news weigh on Alibaba's share price in the coming months?
Okay. As far as Apple is concerned, it probably thinks that it's been able to dodge the bullet by saying that the Alibaba AI availability will only be on Chinese iPhones used in China. But as far as the Americans are concerned, they're saying that that's not good enough, because how do we know what is going to be happening to some of this data? And I think they're also concerned that maybe some of that technology might leak over into the US as well. So it all comes down to data protection and how well is the data guarded. Unless Apple can convince the Americans that, yes, there is going to be no breach of security, no data breaches whatsoever, then I think the deal will be okay, as long as it is isolated. But as you and I well know, Jensen, so the whole point about data is that it can be leaked and things will happen. And so therefore, will whatever is available in China not be available anywhere else in the world? And unless Apple can prove that that is going to be the case, I think Alibaba is going to be in some kind of trouble. As far as I know, Tian, I haven't actually seen Apple come out with a statement saying that they are going to be using the Alibaba AI technology. It's only come from Alibaba itself. So I think we have to wait and see and find out what Apple has to say about this and whether or not they are going to be going ahead with this partnership with Alibaba.
Yeah, indeed. Well, further away, Mr. Kuo, let's have a look at Nvidia. Nvidia said today that it plans to sell a technology that will tie chips together in order to speed up the chip-to-chip communication needed to build and deploy AI tools. Now, Nvidia CEO Jensen Huang, he made the announcement at the Computex AI exhibition in Taipei. Now, he also announced the company's plan to build a Taiwan headquarters in the northern suburbs of Taipei. What do you make of Huang's comments in totality, and what else should we watch out of the Computex exhibition?
Do you get the feeling, Tian, that maybe Jensen Huang and Nvidia is saying that they cannot do this alone anymore, and they're going to need partners, and whether those partners come from Intel, AMD, Qualcomm, any of those chip manufacturers, it's almost saying that, okay, we want to be the king of the data centers. We want to be the king of cloud. And so, therefore, we are willing to work with other people. So if the likes of Microsoft and Amazon want to go off and develop their own chips, Jensen Huang is saying, great, you go and develop your chips. But what we'll do is we'll tie all of it together somehow using our technology. And then you use your chips. You can talk to my chips as well through this interface somehow. I'm not a technologist. I don't know how all of this works. And then we'll all be able to benefit from artificial intelligence. I think that is generally what he is trying to suggest, and that everybody can go do their own thing, but as long as it all comes back to Nvidia and their technology, then that's fine. And I think he's also saying that maybe somehow this can circumvent some of the problems that we have with regard to the East-West. I mean, we were talking just earlier on about Apple and Alibaba. Yeah, and the same thing will happen here. And I think, he knows that China is moving ahead with artificial intelligence. He knows that America is. And so he's going to have trouble selling some of his chips to China. But if other people want to develop chips, particularly the Chinese manufacturers want to develop chips, he'll say, that's fine. You could actually talk to other chip manufacturers through our interface. And I think that is generally what he is playing at. He wants to be the top dog, but he knows that he cannot be the top dog as long as there are restrictions that are out there. But this is very clever. This is very clever from Jensen Huang.
And a quick one as well, just a follow-up question. What else do you think we should watch out of the Computex exhibition?
Well, I am not a technologist,
Okay.
but I think generally there's going to be a lot more stuff on artificial intelligence, and I think it'll be interesting for people like myself who are not that familiar with AI, just to see what is going to be coming out. I'm sure there's going to be lots of robotics and stuff that'll be of some interest, lots of drones and things that'll be of interest to everybody. So I think we're all going to be surprised at what is going to come out from this Computex. Yeah.
Okay, and finally, Mr. Kuo, let's have a look at what's going on in the U.S. Treasury yields. As you mentioned at the start of the interview, they rose as concerns about erratic U.S. economic policies were underlined by, of course, Moody's downgrade of the country's credit rating. We know U.S. Treasury Secretary Scott Bessent, he used TV interviews over the weekend to dismiss the downgrade and warned trade partners that they'll be hit with maximum tariffs if they do not offer deals in good faith. Any thoughts on that? And as always, what should we be watching out for this week as the tariff war continues to weigh on investors' minds?
Well, I think Moody's was trying to be very polite by calling it erratic. I mean, I would call it insane. I mean, what is going on in America is just insane, Tian Tian. And so they came out and they downgraded the U.S. Treasuries. They're not the first one to do it. The other two rating agencies have already done it already. And so Scott Bessent is turning around and saying that Moody's is late to the game and they're looking at historic data. But I don't think Moody's is. I think Moody's is looking at forward data, and they're saying that the U.S. deficit, the U.S. debt is going to increase in size. And so therefore, what they're saying is that investors, if they are going to be buying these treasuries, will want a certain degree of compensation for it, which is why we're actually sort of seeing those U.S. Treasury yields, the 10-year yields, climbing above 4.5%. I think it could climb even more. And I think that is what I'm going to be watching for this week. Who is going to blink first? I don't think the market is going to blink. The market is going to stand firm and say, we want to be compensated. So it's up to the White House to turn around and come up with something that will soothe investors' nerves.
But you know what? U-turn seems to be the name of the game these days, so we shall see how it all goes. Thanks so much for the insights, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.